Traditionally, African energy markets are quite centralized in structure, but a surge in renewable energy projects is causing a shift in this regard. Absa CIB notes that power trading companies and power aggregators are emerging as important new role players in the energy space, bringing new business models and opportunities into the market. Theuns Ehlers, head of resources and project finance at Absa CIB, joins us with more detail. Theuns, an absolute pleasure and a good afternoon to you.
Afternoon, Nolitande.
Thank you so much for being with us today. Very important to note the maturing and decentralization that we are seeing here in Africa's energy markets. Let's talk about that. What does the maturing look like, and what does a more decentralized energy market look like as well?
Yeah, Nolitande, it's, in the past in Africa, we used to have these big utilities, and they were really the sole providers of power. They owned the grid, they owned most of the generation, and all clients, customers basically had to deal with the central utility. The big change now, and the market is opening up across the continent, is the emergence of IPPs, basically independent power producers, who sell power both to these utilities, but more recently, and the exciting piece for us, is that the grids are opening up, and these IPPs are able to sell to corporate clients directly. You still need the grid to wheel power, but the development, and quite strategic and quite positive, which happened here in South Africa, is that they're allowing these guys to use the grid to sell power directly to these clients. And that's created a bunch of opportunities. Instead of in the past where you had to basically sell power to Eskom, you actually now have an option to sell to anyone connected to the grid to sell your power.
It does sound exciting. I want to speak about these opportunities because, of course, along with opportunities are some challenges. It could be challenges with regards to financing, investment, and even regulation. Let's talk about those.
Yeah, look, from a regulatory perspective, I mentioned it's quite positive. The grid and the rules for using the grid is now much clearer than it was in the past. The financing piece, again, there's two main ways that these what we call CNI captive deals are typically structured. The first bunch of deals, we had a single IPP selling to a single buyer. So it's a single buyer, single seller, typically very long-dated power purchase agreement. And then, the focus for the bank really is on the off-takers. If it's an Anglo or a Sasol who's the buyer, you have to assess the credit quality of that buyer, which is fairly easy in the sense that, it's still a very long-term contract. What is now changing is that with the introduction of the trading model is that you will have a trader buying power on a long-term basis from one of these IPPs and selling it to multiple clients. So it's not only beholden to a single off-taker, but actually there's a whole portfolio of clients which these traders will target to sell the green energy, which introduces risks and opportunities. From a banking perspective, what's positive is you're not only relying on a single buyer, you actually have a diversified portfolio of off-takers, which always is good from a risk perspective. The flip side of that is, these agreements are more flexible in nature, in also potentially shorter tenors. So instead of a 20-year back-to-back power purchase agreement, these agreements could be 5 or 7 or 10 or 15 years. And you sit with a bit of risk at the tail end in terms of the ability to then contract other clients at a competitive rate.
What also interesting here, of course, Theuns, it does become that issue of risk that you mentioned, and some of that risk is, really loaded at towards the end of these contracts. But I also want to speak about the risk the bank might be seeing from, these multiple buyers and pricing. As well there, the regulation of pricing. I imagine that some markets on the African continent are way more advanced than others in making sure that the pricing issue is quite clear.
Yeah, look, in Africa, there's different challenges outside of South Africa, well, even in South Africa. The biggest challenge there is access to sustainable grid power. We know that there's more than 600 million people on the continent still who struggle with sustainable power. And it's very expensive to roll out the grid to the remotest areas in the continent. So in those areas, what does make a lot of sense, and it is happening, is the emergence of microgrids. It's basically providing the power generation source close to where it's needed. And these are all business model and a business built around actually supplying power where it's needed. And renewables work quite well. You can introduce solar power with a bit of battery backup and storage to actually provide baseload-like power in areas where it could be more expensive or difficult to roll out the grid. Look, the pricing piece is an interesting one. We've all witnessed over the last decade or so the cost of renewable energy really dropping very significantly, to the extent now where it's cheaper to buy power from a PV or from a wind project compared to any fossil fuel alternative, which basically means that if you look at those remotest areas in Africa, if you start from scratch and design a microgrid which is not dependent on fossil fuels, you can actually provide power at a very competitive rate. Similarly, even where there's grid access, where you're able to wheel power through an ESCOM or through the utility, the cost associated with buying renewable power today is significantly lower than what the guys are currently paying the utility. So in addition to obviously providing the green benefits, everyone has these net zero targets, it's a massive profit objective for them as well. They can actually buy power at a lower rate. And all of these initiatives basically mean private sector is working together to solve one of our biggest issues in the country, which is load shedding. Because it doesn't require an ESCOM to buy the power. These guys are buying and selling between themselves, but in the process, reducing the load and the requirement that the national utility actually have to solve. So from an Absa CIB perspective, we see huge opportunity in exactly helping these guys transition on this journey to achieve their sustainability targets, but also helping them to reduce their cost base. If you think about the mines, we're still a big mining country. We are a big entity when it comes to the smelting operations. Look at the chrome smelters, for example. The electricity cost component for these guys, if you look at their total cost base, could be as high as 30 to 40%. So you can imagine if you can structure a deal where there's a 20 or a 30% saving in the cost of one of their big inputs, electricity, it's actually going to make them a lot more competitive, not just locally, but on a global scale. And that's quite exciting. In the sense we're solving two problems in one go. We're solving a potential or helping to solve a load shedding issue, power supply issue. But similarly, we're also helping the guys to actually go more green and reduce their cost base.
That sounds like exciting times ahead, just to see all of it play out. Theuns, thank you so much for your time and also for talking to us about this development today. That was Theuns Ehlers, head of resources and project finance at Absa CIB.